Hello and welcome to our very first episode where I'm the Unemployed Value Degen, and I'm sitting down with two of my former students who have graduated and gone on to bigger and better things, and they have compliance departments so that their video is not not being shown on this YouTube stream. And we sit down every couple of weeks or so and ask ourselves, combining fundamentals and technicals, what should we be buying right now? And I think it's a pretty healthy process. So say hello to Mitch and Colin. Mitch, do you want to say hello?
How's it going?
All right,
Hey, I'm Colin. Pleasure to be speaking with all the viewers.
all right, and hopefully I get some
Mitch.
viewers.
Yeah. Thanks for having us on.
No worries, happy to. I just want to start things off because so China started stimulating, the Federal Reserve cut interest rates, commodities exploded. Last time I did one of these 2 weeks ago, I was buying some of the resource stocks because coal was really bombed out. I thought I'd have some time to accumulate a little more, and it just shot up and went crazy. But I want to start, since we last spoke, I did a write-up on Cardlytics. And Cardlytics is one of those kinds of stocks that has the potential to 50 bag. And there's very few stocks like that. I wanted to get you guys' feedback on the technicals and technicals, and also just your idea on the thesis and what kind of a weight we should put into a company like that.
So, I mean, off the bat, the technicals don't look great. You know, the fact that it's had these, three levels, it looks unable to support. Major gap downs usually aren't something, that's bullish. Could you go a little bit further out, please?
Yeah, this is the 1 year. What do you want? 2 years?
Yeah, go for 3 years.
At some point, the free version doesn't allow any further. I can't do 5 years unless I pay for it. Yeah, that's 3 years.
So yeah, you do have a little bit of support from the 2023 bottom, but that looks about where we're currently at. A double bottom could potentially be a good entrance point. And typically on plays like this that have gap down, if you are looking to capitalize off the upwards momentum, looking for the stock to what they call filling the gap. So going back up to where the gap dropped. So that April number looks like it's around maybe $7. That could be a good price target, which is well over double what it is right now. And
Yeah.
there's a good bit of support at that area too. If you see from back in March, February, there's some good support at that level. But I mean, the fact that it broke that support could be a sign that it's got further to go, especially if it doesn't hold this level that it's currently sitting at, that bottom. So this is a risky chart, in my opinion. Also, the way that the moving averages have diverged, that's usually not something you want to see.
That's the death cross with the 50-day below the 200-day.
Yeah, and typically when the moving averages converge and they get tight, they get really close, that's when there can be a large probability of a big move upwards or downwards. Right, so the fact that the 50-day and the 200-day are so far apart, that kind of it may signal for further consolidation around this area. We'll see if it moves upwards. The RSI is bouncing, so but it hasn't really recovered all that much. So the relative strength is looking pretty weak still.
Yeah. Well, the big draw for me, because I'm much more fundamentally addicted, maybe to my own detriment, is just that the American Express contract, it should be a huge chunk of new revenue, and there should be a major catalyst within the next 2 quarters. And so far, if I go back to this, I did start a small position. There are some things I haven't started a small position yet, but let me see what the portfolio weight is. So marginal dollars, just for the viewers, is I'm selling a few puts every week and have some small amount of money to roll into the portfolio. So the current weight is 0.2% on that. And the few stocks that have the potential to 50 bag, I would love to get that to 2% of the portfolio, because if you end up being right, then it doubles the portfolio. It's a totally ridiculous psychological reason. But the few things that have the potential to 50 bag, I would love to have a 2% position in those. Now, there are problems with them. They're not perfect companies, but they also have some amazing things going on. Let me see. And I also started a small position in Portillo's, which was my very last article. Let me see.
Yeah, I would like to take a look at Portillo's technicals. I haven't seen those quite yet.
Yeah.
And just back on Cardlytics, I mean, there's nothing like a, catalyst to inflect price. So
Yeah.
if, we think that, that American Express deal is going to come through and, change things, there definitely could be an inflection. So
Yeah. If it
starting
filled
a
that
small
gap, it would
position
be
now and waiting it out. Yeah, if it fills the gap, that's an easy double.
Yeah. Okay. So
Yeah,
then,
I mean, just to add on to Mitch's point about the catalyst, that's really what we're looking for with a name like that. That catalyst just gets all those traders, all those different buy side guys looking at the name. Once they see that catalyst come across the tape, now they're going to be taking another look at the valuations, seeing what they think, updating their old models. I mean, if we really think that's coming, that's almost an imminent, repricing kind of event.
Now, this is a bullish chart for sure. So the upward movement over both the 50 and 200, and it looks like you're about to get a golden cross on those moving averages, as well as the fact that we're above the past area of resistance from this last run up. If you look, a little more short term, go back to the 1 year. This chart's looking good to me.
yeah.
I think in the short term, you've got some new next resistance could be around 15 area, but and then 15 and a half to 17 on the 1 year. That's where it's had some more support and resistance. But yeah, this thing, especially if it could be supported by a catalyst, and the fundamentals that you're speaking about were just amazing. So this thing could really, right? This is very bullish. Last 3 months.
Yeah, that one, when I started researching it, I was like, ooh, this goes right behind the paywall. This is not a free sample. This was not every idea is an amazing idea, but this one I really like. And even if it doesn't translate nationwide, even if it's not the next Chipotle, is still undervalued, and with good technicals behind it. I'm gonna move Portillo's to the top of the list as far as what to buy right now, and then let me check Open Door, because with interest rates in the cutting cycle, with the if the existing housing market heats up at all, did that not update the 3? Yeah, there we go. So, yeah. And this is
based on the limited data we've seen since the rates have come down, it does look like there's a significant uptick in just kind of refinancing, people selling. A lot of it is people just getting out of houses they've been in for, last handful of years. They got in 2020. Now they've been waiting for an out, essentially. So there's definitely been an uptick. We're really just looking and waiting to see if the data shows that sustained moving forward.
Yeah.
Because obviously there's going to be some people celebrating a half tick or a half a cut down, but now it's really just moving forward. Will we see that continue? Will we see the housing market sustain these prices with increased selling?
Yeah, that's what I mean. I was kind of early on Open Door, but there are things about it that I don't like, but the size of the market and the fact that all of their competition just gave up, and that's another paywalled stock on my Substack, but there's just so few things that really have the potential to 50 bag, and Open Door, Cardlytics, and Portillo's are in that camp. But Mitch, what do you think of the technicals on this one? You want to go 1 year or 3 year?
Yes. So I went over with Colin these Open Door technicals, and to me, it's looking pretty bearish still. It's got, since the 23 lows January, I mean, it ran up a little bit, but it's had consistently lower highs and lows since the peak. Looks like it was about August, September, and then August, September of 23, it peaked, and then in 24, it couldn't get past that resistance point, and it's just been steadily lower and failing to maintain and get above the support and resistance. And if you notice back in a few months ago, so it would have been July, it almost made a bullish move to get above the 200-day moving average, but it rejected, which that's really bearish. And the fact that it rejected to a lower low, and I mean, since it's bounced, I think there's good reason to suspect this could continue moving downwards. It looks like it's consolidating in this range, but yeah, failure to hold here could definitely lead to further downside.
Yeah, well, we might have 4 months before any big catalyst, because they're probably still 2 earnings calls away from flipping to, and it's not like a pure cash flow positive. It's a pretty tortured adjusted cash flow positive. But yeah, I mean they're still a tech company. They're still burning through money, but they're still improvement under the surface. So probably no
I
hurry.
agree that it may take a few quarters for them to feel the positive impact of rates coming down.
Yeah,
especially if investors and even just home buyers are expecting further rate cuts. They might not bite at the first rate cut. They might wait if they expect more to come.
Yeah, it's exactly what I'm expecting. Like I said, we see the initial uptick. That's mostly people that were on the market already, and we're just waiting for an out. We're still kind of seeing a wait and hold for those people that are like entering the market, their first time home sale or their first time home buy. We're still waiting to see those really actually hit the numbers. And I think that's exactly what you're saying with the people waiting for more rate cuts. They're expecting it. The Fed's postured for it.
yeah.
So now it's just kind of wait and see. Not a lot of signs one way or the other with open. It's kind of hard to really commit to something that's so, in the middle.
So if we were going to vote, I'm going to guess all 3 of us are pretty bullish on Portillo's.
I'd say so.
Yeah, the other name I'm still super bullish on is Finance of America.
Yeah,
that's
agreed as well.
In my opinion, that's my highest conviction play at the moment.
Yeah,
not to focus too much on sentiment, but sentiment really, when it comes to the stock, and investors on average, willingness to buy a stock, a lot of it comes down to price action. If they're seeing the stock moving down, they're just not likely to buy it, regardless of the fundamentals. But something like FOA, where you see the stock price just getting repriced on a daily, moving up and up, even after that, that reverse split kind of action. That kind of sentiment's just going to bring more investors to that space.
Yeah, I completely agree. And there was 2 really bullish catalysts that, it just continued to consolidate through. It really hasn't even started running into this whole interest rate cut run, right? So they refinanced a huge debt maturity at better than expected rates, and they had their reverse stock split, which eliminated delisting risk. And both of those things were very bullish, and the stock had very minimal impact because it's a micro cap. Nobody's really looking at it. Even now, it's still under 100 million market cap.
Yeah.
Right. But fundamentally, they are, reverse mortgages having 37% market share over origination, with lowering interest rates, high cost of living. I think, that's a no-brainer.
Yeah. And you have your Golden Cross right here in September.
Yep. Golden Cross, baby. And look at the RSI. It's not even, overbought or anything. It's down at 50. That's, 50 is usually, so 70, 50, and 30 are typically the inflection points, right? So if it breaks through this, if it falls down, it probably could find some sort of support by the 50-day moving average, probably a little above like 9, but I wouldn't expect to see it too much lower than the recent buying opportunities.
Okay, nice. So all three of us agree. We all like Portillo's. We all like Finance of America Corp. Finance of America Corp already is a 3% weight in the portfolio. I'm still happy to go heavier because, for the fundamentals, it's behind a paywall on the Substack too. What about Doug? That's at about 1.57% weight right now, and it climbed a lot, and then it gave some of it back. The fundamentals are good. They're just not as good as Finance of America.
One of Douglas's, like one of their offices. I think it was in St. Petersburg, but super nice area, very nice real estate, and yeah, this is a bullish looking chart as well. Good consolidation after this rally. You got that golden cross.
And
now actually looks like an excellent buying opportunity. You see it's sitting at the bottom of its Bollinger Band.
Yeah.
So I think now actually could be a very good time to buy them. And interest rate cuts is going to benefit them as well.
Yeah. So this is not just good fundamentals and a good, medium-term trend. It's also a really good, as far as like a day-to-day or a week-to-week thing. This is a really good buying point, sitting right on the lower end of the Bollinger Band.
Yeah, I mean, if you just look historically, whenever it touches the bottom Bollinger Band, it tends to have a bounce.
Yeah.
And that'll go with pretty much any stock that you see.
Okay. Yeah, just to add on to your interest rate point, where I see this helping them almost the most is from a multiple perspective. They're really, a multiple kind of oriented industry. That's what those things are valued on quite a bit. With those interest rates coming down, all it does is jack up those multiples. So you can just see rather than expansion of multiples, just a re-ratchet up in multiples. So right now, just kind of would be showing these companies as underpriced if you're really expecting interest rates to come down another couple percent in the next few years.
Yeah. Well, I think the consensus for the overnight rate to come down, I think right now it's being priced at Jerome Powell over the next 2 years cutting to 2.75%. I think that is too much. That's just my gut reaction. I don't think we're going to get down that low on this cutting cycle.
It's a little fast. It's a little fast, a little far.
So
that'd still be below the prevalent rate for the past couple decades. Like that'd be lower than what you would expect the prevalent rate to be. It's a little ambitious, let's say.
Yeah, well, I don't think it's lower for the last 2 decades. It's just lower for a longer term history because we've had ZERP for so long. But I think inflation would pick back up before it got down to 2.75%, unless he cut really, really fast. I just don't see him getting there, but I could be wrong about that sort of thing. But yeah, so this is a really good example of not just the good. So I like Finance of America's fundamentals, but Doug's technicals. As far as if I was going to place a trade on Monday, maybe Douglas Elliman is the one for the most immediate impact. I don't know if I ever sold you guys entirely on Alta Equipment Group, but it's another interest rate beneficiary. It's also a massive debt-fueled roll-up. And it has, anyway, that's also another paywalled stock from the Substack. What do you think of that technical chart?
Yeah, that's not looking too good to me. Yeah, so back earlier this year, you see had a pretty bad double top, and it's just been going downhill since then. And remember what I was saying earlier about the 50 and the 200 being really far apart. It looks like it's struggling to get out of this little consolidation range. This is not something I would immediately look to touch, but I do like the fundamentals. I don't think I know quite enough to, make a general recommendation, but the technicals don't look great. I think it could continue to fall.
Yeah, that's fair. Let me go ahead and put that on so it could consolidate for a while. It might give us more chances. With all of the base load power demand, Babcock and Wilcox wasn't my favorite of the 10 bagger or bust series, But with this, I think people are starting to figure out with the baseload power demand for data centers that this might be a kind of a stealth beneficiary. You've got some very very interesting behavior here, but it's also right at the top end of the Bollinger Band. So I'm curious what you think of that chart.
That looks poised for a pullback. So yeah, I mean, it had the top in the same level back in July. I mean, you do have the golden cross, but also more important than that, top of the Bollinger Band and RSI is hot, and
Yeah.
the double top typically is a bearish indicator.
So this one has a pretty good chance of pulling back. It might not hold above this level.
Yeah, so I would say, keep an eye on the moving averages. If it pulls back and it maybe hits the support of, it, let's say the 50 continues to move up to maybe, 1.5, that probably would be a good range to buy if it pulled back. But
Okay.
yeah, this is one I would say to keep on the radar, but I would not purchase at this price.
Yeah. Very fair. Very fair. Container Store. They had a pretty. I mean, they had 2 solid years of surviving the consumer Armageddon, and they had just a terrible quarter recently. It is. What do you think of that?
While the downward movement since that huge run up in early August, that is pretty bearish to me, but it is sitting right back at the support from July, from before this. But yeah, I mean, that is like a textbook example of failing to break resistance, right? I mean, lower highs, lower lows. This could be an important level, especially with the RSI getting closer to being oversold. But there's high potential for it to break lower from here. And I think it would be risky to buy now. You might be able to get it cheaper. And if it gets cheaper, you might be able to get it a lot cheaper. But it also could inflect at this level. And this is a type of play where I would personally want to have some sort of confirmation of inflection before, doubling down and, trying to catch a falling knife.
Yeah, I
Okay.
couldn't agree more. From a fundamental perspective, with this thing being so consumer based, I think it's really something you got to focus on.
Yeah.
Hey,
Operations
getting choppy.
more than with some other names. You can't really rely on their intrinsic value, their value offering.
Yeah. We might have time. This one might not be. I don't have to fear missing this one out, maybe. But it also, I don't know. I have a suspicion that a bounce could happen short term, but I also am not so good at trading in and out of positions. So if it's part of a bigger downward trend, the bounce doesn't really help me all that much.
Yeah, there's been no consolidation in this current drawdown, so I think we're early to buy right here.
Okay, very fair. Um, let's see. Now this one is it hasn't really moved since I wrote about it, but what I really like about this one is its potential to be completely uncorrelated to everything else. And even though that doesn't benefit my portfolio that much, other portfolio managers, when they find something that can be completely uncorrelated, they could bid this thing up to absurd multiples. And that's Burford Capital. Kind of seems directionless for me at the moment, but
Yeah, I was about to say this chart isn't really giving way, bearish or bullish. This kind of looks like it's going to continue this choppy trend until some sort of catalyst, can improve it.
okay. Um, I'll put this one on yellow. This one I have not started a position in, and kind of shame on me for not starting a position. It was a week when there was other things I wanted to buy, and I guess the trend is your friend, and this is the only thing that I have that's really exposed to the whole semiconductor build out. What do you think of that?
Yeah, this is another stock that I'm very bullish on. And I think this is also a moderately bullish chart, right? You have some nice upward momentum and consolidation. So the move from 8 to 12 and a half, 13, that was FDA approval. And the fact that it didn't just fall back down after that run up
Oops, this isn't
shows that.
this isn't the pharma one. This is the
Oh, my bad. This
yeah.
this is AAOY, not SPRY. My apologies.
This is the they do hardware that's going to be used in connecting fiber optic cable to the data center. It's like fiber optic cable junction hardware bits.
I mean, yeah, a name like that's just going to be a huge recipient, indirectly, of course, of all this government spending that they're doing in infrastructure. So anything like that, trend is your friend, like you said. As far as fundamentals go, technical is a little different of a story. When it comes to these names, they can have a little extra volatility. People are jumping in, jumping out.
Yeah, this is more of a growth stock, which can behave pretty irrationally. Value stocks tend to, follow normal conventions a little more tightly. But with growth stocks, as we've seen with the entire semiconductor and AI exposed, coverage, like they can just exponentially explode. And this is having, some strong momentum, some good consolidation. It's holding above the 200, which that's very important. I mean, right now, from a day-to-day basis, it's at the top of its Bollinger Band, and RSI is starting to get a little hot. So with the volatility, you could probably get maybe a little cheaper, but I would look for this uptrend to continue.
Yeah, so you could go either way. The market just might not let you in. It just might keep ripping higher, or I could buy it at 15 and it could drop to 12, because that's what happens to everything I touch. Okay, let's get to what Mitch was talking about, SPRY. And I did start a decent sized position in this one.
And yeah, this is what I was talking about, where the run up from 8 to 13 was all FDA approval based. And yeah, this is just moving up along. It's above its 50-day moving average. Keep on bouncing on it. That's exactly the price behavior you want to see, is the fact that when it dips under that 50-day moving average, it recovers, and those are your good buying points. When you look at something with strong momentum, this is very typical of how the chart will look, right? You'll have the 50 over the 200, and the stock will just keep riding up above, mean reverting, bouncing down, maybe going a little under, and that's when you look to buy. Right. So if you see all three of the last points where it either touched or went under its 50-day, its bullish momentum carried it to continue moving up. So this is very bullish momentum. It's not overbought or at the top of its Bollinger Band. I think it's looking good.
So this one you would put SPRY as a buy. And AAOI, it could go either way, but it's also...
I'll put that as yellow for sure.
The SPRY, it's a 0.86% weight in the portfolio right now. Could get bigger. AAOI, I haven't bought yet. It's a 0. And then, let's see, LifeMD, I haven't bought that yet. Also Nerdy, I haven't bought that yet. So there's one of the problems with writing about so many stocks and just deploying a little bit of capital at a time. I haven't even started placeholder positions and everything I've written about.
Only so much capital available, right?
Yeah. Well, I'm hoping to free up some with some results. For one thing, we're entering into earnings season again, and Medical Properties Trust, I think the lawsuit's going to be resolved pretty soon here. It has a huge potential for a short squeeze, and I would love to exit a third of the position over $8. I mean, if the short squeeze really goes crazy, over $10. But I would love to free up some money because so many things are ripping right now. I do want to reallocate, but I don't want to leave that story before the final chapter.
Yeah, agreed. I think it would be early to cut out, and especially if they do have that uptick, that would follow their fundamentals. It's something I think you'd want to continue to own.
Yeah.
Yeah, and you get paid rent to own it. Dividends are there, so every few months you decide not to sell, you're still getting a little bang for your buck.
Yeah. So this is LifeMD, and I for my readers, my overall thesis is sustained inflation. So I have a lot of land, oil, gold type stocks, commodity stocks. But I also have a suspicion that we're going to see the revenge of Cathie Wood, and I really want some exposure to some small cap, innovative tech stocks that have been just bombed out for the last 5 years. Because I really think there's a chance that small cap tech could really rip. But all the things you've been telling me about when the 200-day is so divergent from the 50-day, but it is at the bottom end of the Bollinger Band. But what do you think of LifeMD here?
Again, we're in a downtrend since May. You had that huge gap down, and it's just continued to gap down, and it didn't hold. So before the last gap down in the 6 region, maybe even 5.5, back in early 2024, that's where it held its consolidation, and now it's consolidating lower than that. That in addition to what you said about the moving averages, and the RSI is not oversold. This looks like a bearish continuation to me.
Okay, and let's get into Nerdy.
Now, Nerdy, I thought, I didn't know they were a public company, but I'm a big fan of their service, Varsity Tutors. That helps me a lot in college. So I definitely can vouch for the project.
I'm not familiar with this name and the service. Read me in a little bit.
So they're an education stock, and the education stocks have all been taking the woodshed because large language models are destroying things like Chegg because it's an easier way to cheat. But Nerdy isn't about a cheating platform. It's about a tutoring platform to actually get you to pass the test. And I feel like...
Right, I was actually just about to say that. That's the differentiation with Varsity Tutors and something like a Chegg, right? Varsity Tutors, they're extremely flexible. They'll meet with you, once a week or whatever, and, get you through a course, not just, give you homework answers. So I think that is, a little bit different of a business model than something like Chegg. And the fact that, universities are looking to partner with them, I think that will bring a lot of volume their way.
Well, it's not just that. They're also doing, they have the remote platform, because they started out in person, but now it's remote. And they're partnering with high schools and elementary schools to get all the parents signed up so that if the parents want to pay for it, they can, but they're already in the system. And then on top of that, they're trying to get some of that government cheddar, that if the government has money to try and, save some struggling students, that'll get funneled into the Nerdy platform. So they're doing a lot of stuff fundamentally that's very interesting for a $118 million market cap stock, especially when education. So Sylvan Learning Centers, when that sold from B. Riley, that fetched a good price. So I really like the segment, and I think it's bombed out because it's lumped in with OpenAI destroying Chegg, but I don't think it deserves to be so bombed out.
Another thing that I think might, contribute to that kind of negative sentiment around those educational stocks is a lot of ones in China, kind of like that Chegg oriented, just like churn and burn. But they get these crazy valuations and come crashing down to zero. And then you see them run back up to crazy valuations and come back to zero again. I think that takes a lot of investors out of the education space. Obviously, it's very uncorrelated from the U.S. kind of version. This company doesn't really relate to something like a Chinese educational tech stock too much. But I think that might just kind of, add to as a factor as why this industry's been bombed out as far as valuations go for a minute.
So should we buy some this week? or should we wait?
I don't think there's very much urgency to buy this.
Yeah. When you see government start posturing that they want to put more money towards education, I mean, maybe a little later in this campaign cycle, we see some more educated-oriented kind of promises. But until we see that real spending pick up, or at least an indication that it might, like Mitch said, I don't see urgency.
Yeah, yeah, I think that's fair. All right, so that gets to so LFMD and Nerdy were both kind of not urgent. Had some fun. I started this entry level position in this solar company, and it took off. It might have crashed back down. So when I wrote about it, it was 49 cents. It's up to 53 cents. I think it was up pretty significantly, but it crashed back down again recently. I don't think I caught the bottom, but it was a pretty interesting one. What do you think of that for FTC Solar?
That looks like it's about to continue the rally. So as long as it holds above 47, which is the 200-day, that looks like you have your inflection point. And, it's moving above its averages. The 50-day is starting to creep back up. And, we might even be early on that golden cross.
Yeah.
So we might be able to get it closer to 47, and it might even, bounce under and then go back up because the RSI is still pretty high, 55. That's there's still room for it to fall, but this rally looks bullish, given that it can, maintain this level. But this is a little bit more risky of a chart. There's not so much confirmation that this is going to hold as there was with some of the other rallies we've looked at, because it's just coming down from that peak. We haven't seen what the price action is going to do after that yet. So I would look for maybe some consolidation, and again looking for it to maintain above both of its moving averages. And if you see the RSI drop a bit, that would be helpful, make me feel a little bit more conviction towards this. Okay. But yeah, this is definitely something to keep on the watch list,
because it didn't give back. It went above the 200 and it didn't immediately crash back below it, so it's sustaining above that 200-day moving average.
Right. And even when it did go over the 200, look where it bounced. It bounced right on the 50. So that's support working, right? And that's what you want to see.
Okay. Learning every day, Mitch. Learning every day. All right. So I'm going to put this is like a very, very, it has some green shoots, but they're not like super green. I've got Schrodinger's, SoFi. I've also got all the materials. Let me just, before this turns to be too long, let me just take a look at some of these material stocks and just see how much they've just ripped outside of their ranges and just exploded. This is Peabody Energy, and again, it's all on the news of the Chinese stimulus package. And this thing was up to like 27 at one point. It crashed back down a little bit to 26. There were a lot of people that were saying, Peabody Energy is a magical money machine. You just, buy it at 20 and sell it at 22. And there were a lot of people on Twitter that said, all right, I sold my whole position at 22 and it just ripped up to 26. And so now they're all mad at themselves.
Now we're looking at something that looks a little bit more like a triple top. And that can be quite bearish. So the other two peaks I'm referencing are the ones in March and then, right before in January. So, and this rip up, pretty much just straight up, right? Like most of me, part of me wants to say that, it should revert to the mean, right? But I think that China stimulus could be the catalyst for a lot of commodities that they've been waiting for. And this has been a very range-bound stock. And this type of aggressive rally, it could be, leaning towards something more being in store, right?
Yeah.
It's a good fundamental company. HCC, they've had a rip too, but not quite the same rip that BTU has.
Yeah.
Right. And HCC is sitting above its 200-day. I think this is less risky of a chart to buy at this current moment if you were looking to buy a coal stock compared with BTU. But yeah, I mean, same story, right?
Without trying to get too
just a
clever,
little bit less.
My gut, and my gut is almost always wrong, so I should ignore my gut. But my gut was telling me to sell my Peabody and Warrior Met Coal and buy more Ramaco resources for a bit of an internal metallic coal rotation. But I've learned not to trust my gut because my instincts are terrible.
Yeah, and that chart looks terrible. Since 2024, that's just been, lower highs and lower lows. And the gap between 250-day moving averages is still substantial. The way the trends are looking, I don't think it's going to hold here. I think
it's going to break down.
It probably will bounce back to a lower low. I mean, I like the story, but especially them not the pure play.
It's not updating to the
fetch
3-year
premium multiples.
There we go. So what I was going to say real quick is I was listening to the earnings call, listening to the CEO talk, and their capital spending. So this company has had really weird patterns in when their capacity comes online. So they do their CapEx, I guess they allocate it in the beginning of the year, and they spend it in the first 2 quarters, and then the capacity all comes online in the second 2 quarters of the year. So what you see is like it goes down, and then in the Q3 and Q4 results come in, it spikes way up, and it's crashing down, and they're planning on having another, I think, 1 million tons annual production come online in Q3 and Q4 of this year. So the longer term pattern kind of matches with that. The stock spikes when the CapEx spending finally reaches its conclusion and that capacity comes online and it's now at a bigger run rate. So I don't know where the bottom is going to be before the next spike up, but they're planning on it getting, I think it's from 3 million tons to 4 million tons production is going to officially have come online in Q3 or Q4. So that, the technicals might be ugly, but
if it's going to continue this trend of lower lows, which you could even see a lot better on this chart, if it breaks past, where it held up at, 990, the next range of support would be around, $9, $8. You see, it back in 2023, it kind of had that range with like 4 or 5 tops. I would expect it to maybe fall to about there, or even like the, a little bit under 8. That looks like it would be around the next range of support. So I think this probably is going to continue to come down rather than continue this inflection.
Well, I told you, don't trust my instincts. They're always wrong. Let's take a look at some of the uranium stocks. Because those are all rallying on, let me go back to 1 year, the restart of 3 Mile Island, and there's just news article after news article after news article about bullish things happening in uranium. This is
Iran's using some new nuclear tests. That could have to do with it.
Yeah. Oh yeah, well, Iran's, that's another thing is, we haven't talked about oil, but today while we're recording this, it's October 6th. There's a lot of people out there saying that October 7th is the 1-year anniversary of Hamas killing and kidnapping people in southern Israel. And so they think that Israel's retaliation against Iran for funding Hamas is going to be tomorrow. And it could be huge. It could be oil infrastructure, it could be nuclear infrastructure, it could be leadership assassinations. But there's a lot of scuttlebutt that tomorrow could be the day. I don't know if Iran's nuclear program is for military weapons. It's not really for energy. So the energy fuels is more about Microsoft signing a 20-year purchase agreement with 3 Mile Island. That has a lot of mind share. And just anyway. But what do you think of the nuclear charts?
Yeah, I mean, as much as I love the fundamentals and the thesis, this is a downwards trend, right? And it looks like this run up, it already got a little bit overbought, right? Look at the RSI, it's coming down. And the only way for this thing to inflect is if, the fundamentals and the macro economy continues to improve. Otherwise, I would expect this to take another bounce. And hey, I mean, long term, if it's a good company and there's not too much in this space that's really worth buying. I think
That's the
just
truth.
buying the dips and waiting for that macro turnaround, right? And
Yeah.
a lot of with uranium is just sentiment on it. There's so much negativity and like misconstrued ideas about how dangerous uranium is. And I
Not to
think once
mention lobbies. Not to mention lobbies.
Right. So I think once that sentiment finally starts to turn around, which I think only can happen through positive PR, um, it, it's hard to see these being anything other than range bound, right? But yeah, I mean that's had a more violent uptick than the last chart, quad
Yeah.
U, and I would want to see at least with this one if it could hold but oh my god.
This is my super secret paywalled uranium stock from the Uranium Tourist Part 3. And
Oh my,
yeah, it's
that should pull back. That's crazy.
it's gone absolutely crazy. I mean, it's gone up 50% in like 2 weeks. It's gone absolutely nuts. And I
Yeah,
Yeah,
from
it's where somebody knows
36 to
something.
57.
Yeah, and I there might have been I think they were waiting on an award contract from a government contract. So I think that it could have hit. It might not have hit. I haven't kept up on the fundamental news. This is my super secret paywalled Uranium Tourist Part 3. Um, but yeah, it's just gone totally insane. But
Well, I
I,
hope your readers bought after that article.
here's hoping. It's been one of my better performers. Um, And then, so yeah, that the commodity space is all going crazy on China, but there could be a pullback, right? I mean, things don't move in a straight line. But I've also heard a
Yeah,
lot of
that
people say
chart
that
looks like it's going to pull back.
the problem with that
Because,
is this is not a value stock; it's a quality growth stock, and like Jackson Financial, and I've heard this from some talking heads. The best stocks never let you in; they never give you a dip to buy. And Jackson Financial was that way. This stock might be that way. And I just have a hard time buying quality growth stocks, even if I write about them. But I think the whole commodity complex could give back some. I've been waiting for gold to give back, and it's just not doing it. But it could, especially now it's up to $2,700 an ounce. So let's, after what we looked at today, what's the marginal dollar? If we were investing some money for the next 2 weeks from rolling a few puts, where should that go?
I really liked FOA and Portillo's charts and Doug as well. The fundamentals for SPRY strong, and the AAOI I think could potentially continue to move up.
Yeah, especially where
But
I
yeah, I
haven't
think Port
started that position yet. I do need to start that position.
yeah, it being a growth stock, you can probably wait for some near double digit down day because it likely will have one. But yeah, I think if listeners were to buy something tomorrow, Portillo, Finance of America, or Doug would be your best bets.
Yeah.
Yeah,
No.
I gotta agree with all the names we've just gone over. To me, from a fundamental perspective, obviously I'm a less technical participant. So the chart to me is like top two I want to buy personally. Like if I had $100 tomorrow, here's what I'm putting it on. It definitely FOA and SPRY. I just love the stories there. To me, there's no way they can lose, kind of thing.
Don't say
Charts
that,
might
Colin.
look a little different.
You're gonna
Yeah, yeah,
jinx it.
yeah. And I was gonna say what came out of my mouth, then I went, oh, But yeah, just off the top of my head, those are the two that kind of stand out to me as like these are the ones I have the urge to buy based on everything I'm seeing, not only just in the names, but in the surrounding spaces around these names, the names like them. They're just the ones that stand out to me as strong suits. Obviously, Doug, Portillo's, they got strong stories as well, but the two that stand out to me, FOA, SPRY.
Okay. I like all those. I agree with all of that. I agree with starting a placeholder in the applied optoelectronics. The only thing that my instincts, and my instincts are almost always wrong, is I want to accumulate more Cardlytics because of the imminent catalyst, and it's so beaten down. It's like 85% off of its with 52-week high. So I don't know how much lower it could possibly fall. It's got
things can always keep cutting.
yeah, that's true. That's that old saying is what do you call a stock that's 95% off of its high? That's a stock that was 90% off of its high and then it got cut in half. So that's
Yep.
so that always can happen. But you have the imminent catalyst. The chart looks terrible. So that's where my instinct, which is almost always wrong, is telling me Cardlytics. But yeah.
So if that's the case with them, I would say, watch out for the dips and just, keep buying small amounts, each dip. And by the time, that catalyst comes, you'll have a more sizable position. But yeah, I don't think it quite has the same urgency as some of the other names.
All
I
right.
think Portillo is something that should be added to sooner than Cardlytics.
Yeah, that's fair. And I actually I did the market research. I took my kids there, and I tried the Italian beef sandwich, and I tried the hot dog, and I made a mistake by not getting the hamburger because I really should have tried the hamburger. And it's I see what they're doing. It's kind of like if McDonald's and Applebee's had a baby. Like it's fast food in the sense that there's no tipping, there's no waitress. You go through the line and you bring the food to your chair, which is good because who wants their bill to be 15 or 20% higher because somebody brought your food to the table? So they're trying to go for that value end of the spectrum. But there's ambiance, right? You're not eating in like a soulless, depressing. Especially when they reformatted McDonald's to not be like for kids and to not have the ball pit, and it's just like this kind of beige, ugly square building. So it's this weird hybrid between a sit-down restaurant and a fast food restaurant, but their price points are lower than all their competition. And so I'm.
Yeah,
Go ahead. Did I lose you, Mitch?
Yeah, I was just gonna say, I think historically the market likes disruptive. Are you able to hear me?
Yeah, I can hear you.
I can.
Okay, so I was gonna say historically, the market likes disruptive restaurants. I mean, think about a Chipotle, a Cava, right? So
Yeah.
I think this could be a similar sort of story to that.
And I think we're getting in probably just fundamentally maybe at the best possible moment. So it was a pretty rare find. I'm pretty proud of it. So yeah, I could totally agree with increasing the Portillo's weight this week with the money from rolling puts, and hopefully, if we get a run up on Medical Properties Trust, I could do maybe a bigger portfolio rebalance because that weighting is too high. But anyway, maybe we can get back and revisit this, give or take every 2 weeks. And I'll put this up on YouTube and cross-post it on Twitter and Substack and see if this makes good content for my followers. And Mitch, Colin, thank you for coming. I really appreciate your insights.
Yeah, pleasure
thank you
having.
for having us.
Yeah, pleasure to be here. Pleasure to share what we can.
All right, thank you very much.